Hello, it's Richard Pears from FinextraTV, and I'm joined by our good friend Martina Macpherson. Hello again.
Hi, Richard. Good to see you.
Good to see you. Ahead of our SustainableFinance.LIVE workshops next week, which you're graciously going to give us a lot of assistance on. To remind people, Martina is the head of ESG strategy and on the General Management Committee, member at ODDO BHF Asset Management, also president of the Network for Sustainable Financial Markets, and visiting fellow for Henley Business School, author, globetrotter, mother extraordinaire. Listen, as I say, you've graciously agreed to speak. We're talking about supply chain traceability, the data that's needed for lower risk. Why is this important to you as a leader in sustainable finance?
Thanks for making the time, Richard, and for getting me onto this seminar representing the investor voice. Clearly, supply chain management oversight and resilience, as we have learned not just since the COVID crisis, is a topic that concerns all of us. That means consumers, that means companies, policymakers, increasingly regulators, and of course, investors. So we're talking about oversight management at a company and an asset level. Because companies in the COVID-19 context especially are expected to further shorten their supply chains to make them closer to end markets. And meanwhile, supply chain risks are gathering more attention finally due to regulators strengthening supply chain reporting requirements. But as companies now face increasing pressure from all stakeholder groups to improve their reporting on sustainability measures and profiling, understanding and managing ESG impacts really is now moving from the different layers of when and where companies understand and can manage their direct operational controls towards the scope 1, 2, 3 further downstream assessments and chains that are harder to manage. So therefore, key sustainability issues often present in supply chains a range of human rights, forced labor issues, health and safety concerns, shortages of natural resources, and the questions around sourcing and traceability of certain resources concerned, as well as the exponential increases in greenhouse gas emissions when and where supply chains and SME companies in that context around the world are concerned. You might have also seen and heard that CDP has recently done a study on supply chain emissions. These are 11.4 times higher than operational emissions. Issues we need to discuss. Others, ultimately, there are persistent systemic social and societal risks with obviously implications for operational and especially supply chain resilience. Again, we will look at data and assessments and methodologies. Moody's ESG group has just recently launched an interesting study that there are high supply chain vulnerabilities that are being obviously amplified by COVID-19. And these are predominantly in the social and human rights issues context. And they actually continue to rise exponentially before and after the onset of the pandemic.
Well, certainly a lot of issues, which is why we're going to be tackling the workshop. Without revealing your full presentation, I mean, you've got a lot to cover. Supply chains are really well managed in quite a lot of instances. Why does this data not really sort of come out of them in the way that we're talking about, so that we can address these issues, and as financial services industry asset managers, that you can put this into your risk matrix and allocate capital correctly? What's happening with this data? Why is it not reaching you?
Yeah, supply chain management data is currently really getting into the focus of ESG research and rating agencies. You can see that if you track just the sheer amount of information I've been also sharing with you that's currently fluctuating on LinkedIn. And we've actually seen some interesting updates and upgrades to Sustainalytics and Moody's ESG services ESG ratings and analyses in this context. And of course, you know, there are very transparent ESG research and rating providers such as ReproScout here, who've also now been going even a step further and fully disclosing their ESG research and rating methodologies, including, of course, the importance of how they assess due diligence in supply chain management. But data gaps remain, and investors such as us are dependent on clear, consistent, and comparable ESG information on core issues. And generally, as we know, there is an aggregate confusion when and where diverging ESG methodologies and metrics are concerned. And in regards to how ESG rating agencies do not measure ESG companies' ESG performance from the lens of the global supply chain, there is currently a disconnect. And I would really like to see, and we will highlight that, there is a recent examination, a study just from October 2021 by Johns Hopkins University, who really tries to look at how supply chain issues are not just listed issues under the S pillar, right? And how they need to be treated separately from other items, but in the same way interconnected to when and where operational issues are concerned, so that you get a clear view and picture on the level of scope 1, 2, 3, for instance, when emissions, but also other sustainability risks are concerned. And we need to actually have and come to a point where we capture in a supply chain metrics less ambiguity, and we need to literally look at how we differentiate supply chain metrics from when and when how a company is reflecting its own ESG methodology and actions, but not from the lens of its supply chain partners. And I think that is one of the main challenges that we really see in the moment, that ultimately companies collect their suppliers' performance information, but then they're creating their own lens. And that can lead to something, right, like selective reporting. And ultimately, because there is no unified reporting standard, as we all know, there tends to be also a way of how companies might conceal bad or worse suppliers, effectively greenwashing their supply chains. And we really want to get to the bottom of these type of issues. And we try to understand how we can better accurately measure a company's ESG risks, as well as its end-to-end supply chain operations, and how it can then consider taking into account environmental, such as, for instance, climate, as well as social and governance issues.
Indeed, beautifully put. So from your point of view, what do you hope from attending the workshop next week? What are you hoping for? And why would you recommend people should attend?
Lending our investor voice to this workshop will enable companies, as well as service providers and other stakeholders, to better understand how important the issue of supply chain management oversight, due diligence, but also resilience management is to investors. You know, we are now talking about roughly $35 trillion in our industry when and where ESG investing is concerned. There are expectations that portfolio labeled ESG are expected to reach something like 53 trillion by 2025 and beyond. But that means also, with this sheer amount of investment / assets under management, there is a clear expectation around more transparency, around rules-based approaches and harmonized frameworks, and, you know, an understanding of when and how we can assess core risks in a clear, comparable, and consistent manner, so that ultimately the investor interest in ESG topics withstand the test of time, and of course withstand also the complexities that are increasingly arising when we look at the broader value chains. And that's why I think, Richard, supply chain management transparency is at the core of this development, of how we look at understanding and assessing ESG risks from different perspectives and lenses. There is no unified reporting standard, as we said. There are different means of where and how we interpret ESG risks and opportunities. There is a bit of a cherry picking going on when certain performance measures and reporting are concerned. So now ultimately we need to move the needle on improving consistency. And there might be some ways on how we can jointly look at how to redesign actually ESG assessment methodologies to take into account environmentally harmful and unethical operations side by side with social and societal considerations across the entire global supply chains, how ultimately ESG rating agencies could create incentives for companies to collect and disclose their supply chain partners' activities, so changing the lenses, which will also enable us to harness information down to scope 3 emissions data, for instance. And as we know that regulation is now taking shape, with Germany just having passed the Supply Chain Due Diligence Act in June 2021, and the European Union's new Sustainable Finance Disclosure Regulation expecting us as investors, as well as through the Corporate Sustainability Reporting Directive, also expecting companies to actually report in line with environmental and social characteristics at heart, which includes supply chain risks, we really are being incentivized and also mandated to provide further transparency in actions. And that means I expect that this topic, the challenges, as well as the innovative data and assessment solutions we will discuss, will drive key stakeholder interest and momentum for this topic, for our workshop and beyond. And there are clearly issues concerning the entire investment value chain that we will bring up, solutions we will bring to the table, and solutions that we can debate because they could only be found at the end of the day through stakeholder debate and collaboration. That's why I also appreciate being on the advisory board of Finextra. So very much looking forward to discussing what we have done so far and where we need to get to much further.
Well, thanks, Martina. I think it's going to be a fascinating debate. I hope people join us, bring their ideas as well. For now, take a deep breath, have a good weekend, and we look forward to working with you next week. Thanks for your time today.
Likewise. Thank you so much, Richard.